Minda Tree.
Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live, the first day of the new series for the month of March, and we're looking positive, about 0.5% higher on the indices. We'll take you through the internals, but let's take you through the headlines for the time being. March series kicks off on a positive note as border tensions ease. Nifty and Sensex trade marginally in the green, but the mid-caps continue to remain strong. India's GDP is set to grow at its slowest pace in 5 years after the third quarter growth falls to 6.6%. Government also revises second quarter growth lower to 7%. Discounting fails to help Maruti sell more vehicles in February, with total sales remaining flat. M&M's tractor division also sees a drop. And Jet Airways chairman Naresh Goyal agrees to step down from the board in an attempt to save the airline, but the final recast plan is still in the works as lenders and Etihad fail to reach an agreement. SBI Life Insurance rallies as much as 7% after Carlyle Group said it acquired 9% stake in the insurer via block deals early this morning. Good morning, Neeraj. First day of the new series, and it's not looking bad at all.
Yeah, good afternoon, Devina. And not looking bad at all. About 0.5% higher for the Sensex, about 0.75% for the Nifty Bank as well. So banks leading the charge once again. It's a positive move thus far. Let's wait and watch what happens. I don't know if it's belief of de-escalation of tension or something else, but certainly doing well. Before we move any further, I want to mark the India VIX and let's see what that one is doing. Remember, yesterday was a bit of a pullback, but otherwise there's a big spike. In today's session, a seriously sharp cool off into the India VIX as well, 16.48. We were talking about how typically after the India VIX shows big spikes, the next day tends to be a bar in the green. It may not have happened yesterday, certainly seems to have happened today on the banks for sure. The mid-cap and the small caps indices very quickly will come up on your screen. The mid-caps have been resilient the last few days. In today's session, very, very buoyant, particularly the small cap space, about 1.78%, so strong show. Bring up the heat map and let's tell you what the index stocks are doing. The auto stocks selectively have some pressure points. Not all of them, the numbers have been good. So Bajaj Auto about 1.16% lower. I think Maruti numbers too weren't the best. It's not in the red though, but not the best. The top loser though, Bharti Airtel, can't quite place as to what's the disappointment, because by and large the deal is EPS accretive as well if the brokerages are to be believed. Maybe some adjustments, maybe the dilution 22%, not something that markets like, but about 3% lower in the session. What's done well? HP about 3% higher. Yes Bank gallops ahead about 2.5% again. Adani Ports too against, but the standout for the last maybe 1 month or the calendar year 19 has to be Z Entertainment. From the lows has just gone one way, and that is up, and continues to rise and shine. But if large caps have done well, safe to assume that the mid caps have done even better. The small cap index gains showing that.
Yeah, so almost 2% for the small cap index and good 1.5% gains coming in for the mid cap counters. I'm going to start off first with a focus on some of the PSU banks which are doing really well in today's session. All of them up and about in trade. So you go start off with the likes of a Union Bank. It's up about 8.5%. Very strong show across the board for PSU banks. Vijaya Bank is up 6.5%, and Dena Bank, another small name there, an 11 rupees stock, but a good 7% gained on in today's session. The stocks that we're watching on closing, the stocks that are remaining in focus is Jet Airways, up 5.5%. The stock moving up post Naresh Goyal deciding to step down, but remember, it's still far from over. There is no clear decision in terms of the debt recast plan and the agreement between the lenders and Etihad. So that's something you're going to be watching out for. SBI Life, early morning session, you had 35 blocks taking place and but 9% equity changing hands. Carlyle is picking up that stake in SBI Life. Stock moved up higher intraday but came back down to about 3%, but still in the green. Volumes buzzers, the stocks which are gaining on the back of heavy volumes. You have a CG Power doing really well, and that trades about 4 crore shares, much higher than the last 20 days average. SAIL is the other one. You've got JP Morgan giving an upgrade on the counter. Stocks up 8.5% in intraday trades at about 52.5. And Century Plyboards, that's up with 8 lakh shares getting traded on the counter. It's up 7.5%. Today's a day of gains across the board for the mid and small cap spaces. But let's tell you how the first day of the new series is shaping up with regards to the liquid universe and what's happening in the F&O space. Agam Vakil is joining in for that. Agam.
Well, it's turning out to be a reasonably positive session for the indices, considering, well, we are seeing the benchmark indices hold on to well, some crucial levels, at least as far as the Nifty is concerned, about 10,800 mark. But what is surprising is where we are seeing unwinding. So a bunch of shorts being covered. Shorts, I reckon, which were taken around Tuesday and Wednesday, that is when tensions were high. But that picture is different for the Nifty banking futures, where your open interest has surged another 19%. And this is towards fresh longs, even as it holds well above 27,000. Another 10% knock off on the India volatility index, now at 16.5. And in terms of open interest distribution, we do have more writing around the 10,800 put and some more writing around the 10,900 call. So we'll be watching out for that, considering we're seeing traction between these two levels. Finally, coming down to stocks which are in focus, and there are plenty, but let me begin with something like a Just Dial, which is actually, well, it's actually given up its gains in open interest, but it certainly is advancing in trade. So that's up 3.5%. We also have Arvind, which is also seeing around 8.5% increase in OI. I reckon we're going to have to correct the open interest number out there. And moving on to several others, we also have National Aluminium. That again is seeing a lot of traction. Again, the plates have a little bit of problem there, but these are the three odd stocks that we're keeping on our radar as we move into trade today, Devina.
Right, Agam, thanks a lot for that. Nalco also, I watch out for that one with a dividend of 4.5 rupees. That's a dividend yield of 9%. The stock's up about 5.7% right now on the spot. So, you know, that initial excitement that's coming there on the dividend play. But moving forward, Sundaram Mutual Fund is betting on cyclicals, not only consumer discretionary, but also engineering and cement stocks. In a chat with us earlier on today, Chief Investment Officer S. Krishna Kumar said patience is key to play this theme, especially in autos. Here's an excerpt of that conversation.
In terms of the portfolio construct, we do believe that there could be a significant improvement in the cyclical space in terms of growth, be it whether consumer cyclicals like discretionary part or some of the engineering companies and cement, where there could be good uptick. So I think, you know, on the consumer discretionary part, I think definitely the last 6-8 months have been muted in terms of growth, and you know, that includes automobiles also. So I think that's a space which is definitely interesting, but you know, one has to have a little bit of patience here too, given that you know, there is a little bit of regulatory changes that's happening in the auto space, you know, new norms in terms of safety features and also emission norms coming in the next 12 months, which would increase the cost of the vehicle, and hence you know, we have to await how the pricing power unfolds for the automobile sector. So though we remain positive on a 3-year basis, next 6 months could see a little bit of readjustment further to continue you know, on the auto space. However, on the durables and the appliances space, you know, that we could look at, I think there is definitely a case for getting more positive incrementally here and building out a higher exposure in those sectors, given the softness in the last 6 months that's been seen. Also, the retail sector and the brand apparels, again, a space where there is enough growth happening and also improvement in terms of margin profiles of various companies. So these are areas on the discretionary side where we are increasing exposure. On the other cyclicals, as I mentioned, we do expect you know, the cement sector to continue to see improvement in terms of volumes, and a little bit of softness on the cost side would help these companies register improved profitability. And also with better demand, you know, pricing power also comes back to them for the next 6 months. So that's the sector which has been you know, quite reasonably valued, and we think there are opportunities for investments there. On the other sectors like light engineering and capital goods, we have been talking about this space for quite some time, but right now, if you see, there is a fair bit of corporate confidence that has emerged over the last 3 years. Capacity utilizations are inching over 80% in many sectors. And hence we see a good revival in corporate capex in the next 12 months, and we already are seeing signs in terms of order books and order backlogs improving in terms of book-to-bill ratios. So that's a space where incrementally one has to be a lot more constructive. And of course, the corporate banks have been seeing easing of stress incrementally, and hence there is a lot of relief there, and many of them, the large ones, have become also a lot more retail oriented in terms of mix basically. So these beaten down stocks have been in the radar and continue to be good from a medium term perspective on the large cap private bank side.
Okay, now let's focus on some key newsmakers, aviation companies and Jet Airways in particular, auto companies and SBLI. First, start off with Jet. Naresh Goyal has agreed to step down as the chairman of Jet Airways. Goyal, who met the lenders on Wednesday, was left with little choice, according to two people with direct knowledge of the matter. Vishwanath Nair joins us right now with additional details as well. Remember, we spoke to Vishy in the morning. Vishy, maybe there are some other developments otherwise, but what is it that you're learning from these two key people who have the direct knowledge of the matter?
Right, Neeraj. So we understand that on Wednesday there was a late evening meeting that SBI had called. They invited all the senior lenders, senior bankers with all these banks. They had also called, senior management from Jet Airways, especially Naresh Goyal, as well as Etihad Airways, who was one of the partners for Jet Airways. So what we understand is that the one point everybody seemed to agree upon is that Naresh Goyal needs to step down from the board, from his executive position, and that going ahead, you will need some kind of equity infusion into the company, which will come either both from the promoter as well as Etihad Airways. So this specific point about the equity infusion was the point of contention between the lenders and the company. Essentially, the conditions that are being placed in front of the lenders by Etihad for funding Jet Airways, those are very stringent for the lenders at this point in time. They do not feel comfortable agreeing to something like that at this point in time, because of which it is understood that there is going to be a long round of negotiations later, and then only after that will they come to a conclusion. Apart from this, of course, there is a resolution plan in place where a part of the debt is going to get converted into long-term equity-like instruments. The rest of the debt will eventually be rescheduled at some point in time. There is also talk of a rights issue where the existing shareholders will use that opportunity to pump in equity. And after all of that, there's going to be some new investors coming in. NIIF is being talked about in the press. We were not able to independently verify it, but these are all parts in motion at this point in time. But eventually these things will come together, and the expectation is that they will close it as soon as possible. Because remember, there is a deadline that is looming. By the end of June, this 180-day deadline which the RBI has set for banks, that will come to an end. Once that 180-day deadline passes, then the banks have to go ahead and file an insolvency petition at the NCLT, which is something that the bankers want to avoid, because the recovery from NCLT is expected to be much lower, and therefore banks do not want to go down that route at all. So they're trying to resolve it at this point in time. Jet is struggling. There's about a 10,000 odd crore debt. Its pilots have said that they are not going to cooperate. There's already planes being grounded, about 19 odd planes just this month. 6 got grounded just yesterday. They put out a stock exchange notification. So all in all, things are looking slightly bad for Jet, but then lenders are trying to race against time, if I may use this term. But if they want to close it at the earliest. That's what we understand.
Any idea? Any more meetings lined up?
Dates have not been set so far. I mean, this meeting took place only the day before, and yesterday the bankers were busy with the finance ministry meetings that were organized by the IBA. So, hopefully soon.
All right. Okay, Vishy, thanks a lot for
Thanks
that.
so much.
That's a quick word on what's been happening at Jet. The stock, though, is up about 5.5%. The step down of Naresh Goyal was something that the market was looking for, and that's what they got to hear. And in light of that, about 235, that's where the stock's trading at. Still early days for Jet. The news trickling in is still negative with regards to operations and the entire deal, which is nothing has been finalized yet. But at least this one silver lining that came in from yesterday's comments, and the stock up of 5%. Moving on, automakers tried deep discounting and promotional offers in hope of recovering from the slowdown seen in the past couple of months. But it's failed to accelerate growth. Auto sales numbers reported so far show demand remained muted in February. Yatin Motor, he's standing by with a snapshot. Yatin, clearly it's not really worked its way in the numbers, the discounting that they undertook.
Devina, we have seen record, discounts in the December quarter. Not only that, they continued in in January as well as February. And despite, trying to revive consumer sentiments with new launches and probably some discounts on, older models, we have seen the sales not pick up in the month of February as well. Most of the auto companies did expect some bit of bounce back in 2019. That is yet to be seen. Starting with market leader Maruti Suzuki for the passenger vehicle segment, their overall sales were down nearly 1% to come in at 1.48 lakh units. The Bloomberg Quint poll was throwing up a number of close to 1.55 lakh units, so it was below estimate. And not only that, their mini segment saw a sales decline of 27% year on year. Exports fell 20%, and of course the mini car segment fell so steeply by 27%, owing to the phasing out of the old WagonR as well. But despite all of that, the numbers are slightly on the weaker side. Ashok Leyland, the total sales again here were flat. However, if you look at the medium and heavy commercial vehicle segment, where the market was expecting some bit of growth or good performance, there also we have seen a 4% decline. Escorts, the growth was close to 12%. SML, the share price is up 20% today. There the growth was 33% for the month of February year on year. Bajaj Auto, that is an interesting company to watch out for. We are expecting decline in sales for TVS Motors as well as Hero MotoCorp. But Bajaj Auto has reported a sales growth of nearly 10%. The domestic motorcycle business has grown by 6%. However, if you look at the commercial vehicle segment, which is basically their rickshaws and other similar commercial vehicles, there the domestic sales have fallen by nearly 9%. So this time again, the exports have been probably the silver lining for Bajaj Auto's February numbers. And finally, we have Mahindra & Mahindra. Their total Feb auto sales were up 10% on the back of new launches, which include the Marazzo as well as XUV 300. And also tractor sales declined 8% for them. Again, a below estimate kind of a performance. Total tractor sales came in a little lower than 19,000 units versus the Bloomberg Quint poll of little over 20,000 units.
Okay. Yatin, many thanks for putting that into perspective. So that's the automakers in this month gone by, and you can argue that a lot of them have come in line with what our survey as well as the polls were suggesting. However, so while autos may not be having the last laugh, air conditioning and air cooling solution companies seem to be doing okay. They are facing a second consecutive year of maybe lower sales volumes, but the prospects of a hotter than expected summer is maybe helping the sales outlook or maybe the demand right now. Joining us to talk about the same is Sunil Shankar, business head for air conditioners at Onida. Sunil, good having you. Thanks so much for joining in. How is it shaping up? I mean, the stock market behavior seems to suggest that air conditioner, air cooler sales have picked up. Is it indeed true for your brand as well?
See, the market has not picked up as far as the primary, secondaries are concerned. But certainly, since this being the primary, AC season, so primaries have picked up for sure. So dealers are stocking up in view of the ensuing summer. And we expect that since the winter has been good, I think it will be a bumper summer. So everybody is stocking up. Market is yet to pick up as far as consumer pickup is concerned.
For the whole industry, you're saying, right? Not just for Onida?
For the whole industry, not just for Onida.
Okay, but dealers are stocking up.
Yeah, dealers are stocking up, and so that's why all companies, I think, we are doing quite well on our numbers.
Right. Mr. Shankar, just compare this period to the period last year, because the winters have been slightly more prolonged, and,
yeah.
In respect to that, do you think the impact may be negative?
तेरा password क्या है?
No, see what happens is last year I think there were quite unseasonal rains. If you'll see, if last year February to say March, April, there were unseasonal rains both in the southern market as well as northern markets. But this time the winter has been good and prolonged. So whenever we see that the winters are good, I think summer is extensively good. So we are seeing that the temperature is rising, and we expect that the sales will be good this time.
They get pushed a little back, the sales, is what I'm trying to say.
It's pushed a little back, yeah. That is why the customer offtake should have started in the month of February. That is not being seen because of the prolonged winters.
But nonetheless, by the end, by the time summer kicks in, you expect after a strong winter, the summer will be equally good, and that could that will cover up for the pushback in purchases.
That will cover up for the pushback in purchase, because that is what the dealers are stocking up for, and we expect that the offtake will be much better, because last year, if you'll see, the entire AC season was not very good. April, particularly the month of April, was very bad. This summer picked up in the month of April, May and June. So May, June was good, but April was not good. So compared to that, we see that this year the season should start from March, and April should give us the desired growth, whatever we are looking for.
Okay. My one final question would be about whether a higher sale number would be accompanied by operational benefits as well that could come in, because I mean the raw material costing, when we spoke to some of your competitors, all of them had to say that the raw material costs for companies like theirs have come off. What's been your experience?
Yeah, there are two things if you'll see in the costing part. If you'll compare from last year, the raw material cost has come down. But for us, companies like us, where we are importing, there is a 10% custom duty increase over last year, which was done by the government in the mid-season. And also the rupee value has gone up. So last year, if you'll see during the same period, $1 to rupee was 63 rupees or 64 rupees. Now it is at 71 rupees. However, the decrease in the raw material prices has offset that, and the profitability should go up.
Okay, we'll leave it at that. Thanks so much, Sunil, for joining in today and giving us your thoughts. Really appreciate your time. That's, of course, Onida. Well, I don't think they will feel the heat, to be honest. From whatever little Sunil Shankar is saying, that numbers have actually started looking up, at least the primary sales, if not the actual retail sales. The primary sales have started looking up, and that should actually be positive for almost all the AC companies. So do watch out. In the last few days, all the air cooler companies have done really well for themselves. Symphony closer to 1300. Voltas the last few days has done extremely well for itself too. So some of those companies, well, they probably all of them have started seeing better primary sales, if not secondary sales. And maybe the belief is that the outlook ahead could be positive. Okay, so now the next couple of stories, one of them is something that we'll do an analysis on sale, and then we'll get in Sajid Manga to speak about the new norms on Sebi. Let's first put the spotlight on sale, which has posted the highest intraday gains in a year. It's the largest single day surge, which came last February. JP Morgan has upgraded the stock to an overweight. And why is that the case? Well, let's try and figure out. Firstly, the reasons why JP Morgan has decided in its own sweet way to put a spotlight on sale, and which has led to this 8% uptick. They've, of course, changed their stock rating to, as I said, overweight from underweight. So that is the first thing. And the target price is much higher than the current market price, and which is why I think this 44 million shares traded on the counter today, and this 8% uptick that we've seen on the stock today. So good going really as far as the price movement goes, and it's been a while now that companies like SAIL, etc. have done this price movement. So the graphics will come up on your screen. They maintained the price target at 78 odd rupees, but that upgrade leading to the stock doing this. They believe that the risk reward is very favorable from a price perspective for anybody who's entering into sale at the current point of time, and that the higher iron ore prices, which are pushing up steel prices, and the benefits of these prices and the volumes have not been discounted or baked in by the market, but essentially higher iron ore prices, which is pushing up steel prices, which will eventually show up for sale. Now, what has this done? That's the interesting bit. Firstly, the volumes have substantially moved up. This is the AV80 function on the Bloomberg terminal. The white line is the 20-day average volume. White line is today's volume, and okay, the expanded version will come up on your screen. This white line is today's volumes. This blue line is the 20-day average volume, and as you can see, the average volumes have also picked up, but today's volumes substantially higher than the 20-day average volume. So that's part one of the trading pattern today. If you can get back to the graphic dashboard, you will see that it is still trading at a discount to the peer averages, and the street is still divided equally on sales. So 7 buys, 7 sells, and 5 holds. Despite the price drop, not too many people have turned bullish on sale. And last but not the least, just before we move on to the next topic, and that is on Sebi, last but not the least, if you can just see this, that there is a bit of an uptick that is coming to the price movement, not on the consensus prices. If the street converges to this, then there might be some upsides that might come in for sale as well. So that's something that you should keep it at the back of your mind. Devina, sale up and about in the session today.
Yeah, and the quarter 3 numbers clearly showed the kind of strength that the counter has. 79% increment in revenues, 8-year high for their EBITDA per ton, came in at about 7,900 odd rupees per ton. I mean, so it's definitely on the cost efficiencies that we've seen, stronger realizations that have come in, which have really boosted the outlook for sale. 78, that's still a bigger upside for sale right now from the current market price of about 52 odd rupees. But moving on, the Sebi board, which met for the first time after the budget today, has approved changes which exempts IBC cases from an open offer. Sajid Mangat now joins us with more details. Sajid, this is just one of the few changes made by the regulator.
So, okay, so before I go to the changes with respect to open offer and preferential issuance guidelines, let me look at the REIT and InvITs guideline, where Sebi has gone and relaxed some of the guidelines for some of the players. As you know, there's not much of activity happening in this segment, and we have only a couple of companies which have listed. So there has been some relaxation with respect to the lot sizes, with 1 lakh lots, minimum 1 lakh lot size of for InvIT and 50,000 for REITs, and that's primarily to increase liquidity in the market for this product. But Sebi has also allowed increase in leverage for this product from 49 to 70%, subject to condition that the consolidated debt of the REIT or the project remains at AAA. So for that they have to ensure that they have given at least 6 distributions. Now distributions here mean dividends given to the REIT holders or unit holders of REITs and InvITs in the past 3 years, in the preceding years before the leverage is taken up from 49% to 70%. Now coming to the CDR changes, which is significant in nature, because for the first time the regulator is narrowing the definition of exemptions, because there were too many exemptions being asked. So what it has done is that now exemptions with respect to preferential issue guidelines, open offer will only be restricted to lenders and financial institutions. Exemption which is will not be available to any other person except for the lenders. That's what it said, and this exemption is especially with respect to acquisition of shares from the company, not from the secondary market, but primary issuances which the company makes to an investor. It has also ensured that any exemptions which are available under the IBC remains the same, or any court of law which is giving a scheme of arrangement continues to be available. But at the same time, it has said that it's going to remove the competent authority. Remove the term competent authority from the takeover code. Now what does it mean? It basically means that if there was any competent authority which was giving an exemption to a company from open offer, the Sebi was bound to do it, because under the regulation it had that provision. Now it will not be giving it, because under the regulation it will not, the entire word competent authority has been removed, and instead of that, it's trying to get a structure in place through the IBC. It's a very negative news for Jet, at the Etihad deal at least. Primarily because we know that Etihad is trying to invest in Jet through primary infusion, and Etihad was looking at a price point which required the company to seek exemption from the preferential issue guidelines. And the fact that if its stake goes about 25%, it has to come out with an open offer for Jet. Those two exemptions will now not be available to Jet Etihad, and in that sense, it becomes a big problem for the lenders who will be getting 51% stake at 1 rupee to sell it to a strategic investor. So that is going to be a big challenge now going forward, as the regulator curbs the exemption allowed under the regulation.
All right. Sajid, thanks so very much for that. Some exclusive news flashing on your screens with regards to Tata looking to sell some stake in JLR, and preliminary talks right now with advisors, to look at the stake sale proceeds. So you've got the stock, which is up 3% right now, a big sharp rise in the stock. PR Sanjay is joining us with more details on the phone line. What have you got for us?
Hey, Tata Sons is having a relook at its Tata Motors luxury car maker, Jaguar Land Rover. If you could recall the kind of a massive write-off that JLR had to take at the last earnings season, which has also, apart from that, the China waning demand and the Brexit confusion have forced them to have a relook at it. So sources are telling us that these things have forced them to review Jaguar Land Rover's operations, and they are exploring all options, including a part stake sale or an investment or larger, wider technological collaboration to take JLR ahead. Because now they have come to a stage where they will have to go for. They will have to take a final call on JLR at this point of time.
They still want to keep the control, right?
Sorry?
They still want to keep control at JLR.
Yeah, so, it is at very, very preliminary stages. They are talking to advisors. When the sources are telling us that they have not got any concrete proposals from investors, they have not reached that stage. But now they are taking a relook at, which would include talking to advisors and taking a pitch from them. But to keep whether 100% control or not, it would be one will have to wait and watch.
Okay. Sanjay, Yatin, I'm sure, has some questions for you as well. Yatin, over to you, and also give us a sense of how would this shape up for Tata Motors, because JLR was supposed to be the one that was driving the performance, save for the last 1 year. Yeah. And now they're looking, or maybe looking to sell stake here.
Absolutely, and this is a big story developing at this point in time, and I just want to ask a couple of questions to Sanjay before proceeding. Sanjay, we understand that these are early options, and they are in talks with their advisors, but tell us, earlier also there have been various reports suggesting that JLR also was looking at an IPO. So do you think what could be the probable stake sale mode? Will it be an IPO? Will it be a stake sale to a clutch of private equity investors? Or how really do you think Tatas are looking at this JLR asset at this point in time? When the market was robust, when market was really right, they were looking at the IPO. But suddenly things changed with waning China demand as well as Brexit confusion. So at this point of time, would they look at an IPO, which is very tough? And what management is, what sources are saying that they are not preferring a private equity investment at this point of time. Okay. Rather, they would be looking at a strategic investor which will help JLR to take it further, because there are a lot of regulatory changes also happening across the world. And EV revolution is also in front of staring at them. So they would want a lot more guidance, a lot more technological collaboration. So they would prefer a strategic partner at this point of time rather than a financial investor. That's what I am picking up. Okay, any sense of how really are they looking at using the capital? Will it be a fresh issue, or will Tata sell their stake? Because what I understand from the last quarter's write-off, which happened in December quarter, that probably the debt position and the net worth scenario has changed a lot, and probably JLR would need sooner or later, given the expansion plans, some equity support. So do you think this will be a probable fresh issue and a capital raising exercise which will be used to strengthen the balance sheet of JLR to a certain extent?
We had posed these questions to the sources, but what they are saying that at this point of time there is no concrete proposal had come before Tata Sons board, which will entail the details or scope, including fresh issue, or it would be an IPO, or it would be a strategic investment. But what we are getting is that the board has been unanimous in taking call that they'll have to relook at the JLR's finances at the earliest. So that is one point, and they started getting ideas from advisors at this point of time. So it is too early to get into those kind of details.
Okay.
All right.
Neeraj, with that is back to you.
All right, Yatin. Thanks a lot for that. PR Sanjay, thank you so very much for bringing us that exclusive news on Tata Motors and JLR. Remember, Neeraj, JLR has been in the recent past taking measures to bring down costs. There were talks of big job cuts. They had shut down their factories because the demand from China slowed down. And even though right now a no Brexit deal is less likely, it's still having a big toll on automakers across. So ahead of that, something like this would definitely go down well in terms of what happens, because they've already seen the biggest knock for themselves, maybe the loss that they posted. Now this roadmap ahead is something that's of more interest to shareholders as well.
Yeah, the only thing is that except for the last 1 year, JLR has been the baby that has kind of saved Tata Motors. It's essentially a JLR story. And the fact that they are looking to pare some stake out here and still keep the major stake, which shows that they are still interested in running the business, just the fact that they probably need to more than they want to do this. And maybe that's the need for the hour as well for them. The stock up about 2.5% right now, but as I think PR Sanjay said, very preliminary stage. This conversation is just advisors talking. This may well take months, if not quarters, for this to materialize.
The stock, though, over the last 7 to 10 days has been the outperformer in the auto pack, actually. If you take the last 7 days performance for Tata Motors, it's already up 10% to about 181. So the big knock that you saw post its Q3 results sort of, I can't say whether it made its bottom there or no, but definitely from those levels it has picked up to about 181 to where it's right now, up 2%. 16.28 million shares that have already been traded, and you can see the graph, the move there for Tata Motors. Bringing in our technical experts, Gaurav Bissa of LKP Securities, he's joining us right now on the show. Kshitij Gandhi, Senior Equity Research Analyst at SMC Global, he's also with us. Gentlemen, thanks very much for taking out the time. We're going to take a look at the index first off, 10,857 on the Nifty. A strong first day of the new series. How would trade look now? I'll start off with you, Kshitij.
Okay, very good afternoon to everyone. First of all, I would like to add that from a broader perspective, the Nifty has been, hovering in the broader range of 10,600 to 10,900, if I'll say from last 2 months. But from the expiry, on expiry day, we have seen some long rollover getting into the market, and FIs are actually putting up their money into the market. So at current juncture, on a short-term basis, I believe the index should consolidate in the range of 10,750 to 10,950 with some volatility on the cards on the back of ongoing geopolitical tension between India and Pakistan. But yes, on a stock-specific action, we can see some good lower level buying into the stocks, either in particularly as we have seen in banking sector today. So stock-specific action can be seen in coming week, but on a short-term perspective, index should consolidate in a broader range of 750 to 950.
To some of those stocks in a bit. Gaurav Bissa is with us as well. Gaurav, good having you. Good afternoon. How are you approaching trade today? The first day of the new series, the index up about 64 points. What would you advise?
And good afternoon. If you look at the kind of data that the Nifty has thrown upon in last few trading sessions. We have not seen very aggressive rollovers, but then again, it's not a very bad sign considering that in last 5 months we have been opening around levels of 10,900, 950, dipping towards 10,650, 700, and yo-yoing between 10,600, 10,950 overall. Same is the case at this point in time. We are not seeing too much of aggression as far as open interest is concerned. If you look at the option chain, even that shows the picture that it is going to be range bound for next few more trading sessions. Ideal strategy: do not preempt the breakout. It took 5 months and it did not go anywhere. So it can again take 5-7 more days. My strategy at this point and what we have advised to our clients as well: sell options in Nifty weekly options. They are proving to be a very lucrative trading tools. One can sell a 10,850 straddle, that would be 10,850 call, and put both combined sold at the current price. The combined premium comes on 150. Keep a trading stop loss of 180. Targets would be 100 to 80 rupees. And the last few trading sessions, or the last 2 weeks, selling straddles and strangles have been making consistent money. So I think this is one strategy that can be kept on radar.
That's on the indices. Let's talk specific stocks right now. Gaurav, I'll keep it with you. Your stock ideas?
The first recommendation today would be a buy call on Bharat Finance. We have seen some decent amount of long positions getting built on technical parameters. It's been taking support at levels of 950, 920. It's given a breakout from falling trend line on daily charts. If the current level is sustained, it can go towards 1,020, 1,040. Overall, the stock has not been performing. It has been trading in a range. You can now test levels of 990. Keep a stop loss of 938, 935. Second recommendation would be buy on Wockhardt Pharma. Aggressive shorts were seen getting built. We have not seen those rollovers being the shorts being carried over quite aggressively. 390 has been maintained as a very strong support, a rounding bottom pattern on daily charts. It can go towards 450, 460 positionally. For trading per se, one can keep a stop loss of 395 on the upside. Levels of 415, 425 is what I would be looking at.
All right. Kshitij, you also have your calls. You've got 3 calls: Godrej Consumer, Godrej Industries, and CEAT.
Definitely. I have 3 buy ideas for today. The first stock is from the tire sector. We have seen, like in a recent past, tire stock has not been performing that much into the market. But as of now, I believe the lower level buying or a kind of short covering should come into the tire stock as well. So first stock would be from tire sector. The stock is CEAT Limited. On a technical chart pattern, the stock has made a rounding bottom pattern on a daily charts and is on a verge of breakout above 1120 levels. So one can take a long position by keeping a stop loss just below 1070 level for the upside potential of 1155 to 1160 levels. The second stock is Godrej Consumer Product. Again, the stock has given a breakout above the falling wedge pattern on a technical charts, and I believe the momentum will keep going into the stock till say 710, 715 levels. So one can take a long position by keeping a stop loss just below 660 levels for the upside potential of 710 to 715 levels. The last stock would be again on a buy side, and the stock is Godrej Industries. On a technical chart, we have seen in a recent session the stock has been consolidating in a range of 470 to 485, but in yesterday's session as well, the lower level buying has emerged into the prices, and I believe the momentum will keep going into the stock till 525 to 530 levels. So one can take a long position by keeping a stop loss just below 485 levels for the upside potential of 525 to 530.
Okay. Well, let's get into fundamental voice on the show as well. Rahul Arora, CEO Institutional Equities Business at Nirmal Securities, with us on the show. Rahul, good having you. Thanks so much for joining in. Buyer, seller, neutral? Looking at the sentiment.
Well, it's, you know, as they say in Hindi, maza nahi aa raha. It's become too predictable, I think. The only good news, Neeraj, is that in the last quarter of the last calendar year, you were probably in a broader range of 10,000 to 11,000 on the Nifty. In the first quarter of this calendar, that's probably moved to 10,500 to 11,000. So to that extent, the lower base has moved up. So you may be inclined to believe that if there is a breakout of this range, it's probably going to be on the way up. I think the negative news flow we had in terms of the region over the last couple of days, at least for the moment, has subsided. And I think that's probably one of the reasons you've seen the market trade strong today. But I think I don't see us taking out 11,000 in a very decisive way, at least till the elections get through. But I think if the lower end of the range keeps moving higher by about 100 or 200 points, I think, you know, the case for breaking out on the upside remains far more stronger than it is probably revisiting 10,000 is my sense.
You know, the companies where the least amount of good news is anticipated, and if there's some a sprinkling of good news. Those stocks are really zooming through. I mean, leave the Nifty out and we'll talk about some Nifty names too, but PSU banks are case in point today. The air conditioning companies, air cooler companies, the last 2 or 3 days. Cement, and I think you guys wrote an extensive note on that as well. Where within these high frequency indicators are you finding favor right now?
So Neeraj, you're right, because the market pretty much had moved towards consumer. Everything consumer was sort of almost getting disproportionate valuations, and this includes probably even on some of the banks, especially in the mid-cap sector if you were a non-PSU. So staples, discretionary, durables, electricals for that matter, and by banks you saw some very large multiple expansions. I don't think the auto story in India is over to that extent, Neeraj. I think the way people have sort of written off Maruti and Eicher and Ashok Leyland over the last 6 months, and the multiple derating that you've seen. Of course, there has been an earnings derating, but the multiple deratings, probably someone was ready to ascribe a 30 times to any of these companies. That probably has been reset to 22, 23, maybe even 24, 25 times. So there's been an earnings reset, there's been a multiple reset. So I think that's probably one pocket which is, tilting towards consumer where you could potentially look at, is my sense. The other is, Neeraj bhai, I think, I don't think public sector banks is a long-term investment.
Not at all.
I don't think that's the case. I think at best, it's like you're walking in a desert, you see a little bit of water, you're going to gulp it up in one sip. That's pretty much what's happening with PSU banks. I think, once the water is in the system, you'll begin your walk again. You'll probably forget about the water you've consumed, waiting for the next, run to come through. So I think that's very different from the way people will probably look at an ICICI bank or an Axis bank. So just to give you a case in point, I mean, if you just go back 18, 24 months, the kind of provisioning that ICICI bank was doing on an annualized basis was between 12 to 15,000 crores. Our own expectation is by FY21 that probably drops down to 9,000 crores. That's a huge jump in PAT. It'll happen with SBI also, it'll happen with Bank of Baroda also. But I just think somewhere people ascribe a lot more premium on the governance of private sector banks, especially with the change in managements that's happened on the private sector side, which was seemed to be the untouchables. You've seen, a share of forced management changes in ICICI, Axis, yes. So I think to that extent, and there's been a new chairman that's taken over one of these banks today.
Yes, bank, yeah.
So I think to that extent, I think if you're looking at large corporate sector, related private banks, I still don't think any of them are trading at over 1.5 time price to book on FY21. And autos, I think those are probably two places where the market's depressed valuations for some time, where I think incremental money can be allotted.
By the way, just look at this Atul Auto, Devina, just one point before we move on. Atul Auto, the Feb Auto sales numbers on your screen, the stock is up about 7-8%. This happened with SML Isuzu as well. These are not really big beats or a big growth number that has come out for either of these two names. But smaller bases, 13, 14, 15%, 20% growth, and the stocks are getting rewarded and rewarded quite strongly. Slightly liquid names as well, so you got to keep that at the back of your mind. But SML Isuzu, that's about 200,000 shares traded, which is not bad. And Atul Auto, of course, a fairly liquid name, up about 8.5% in today's session as well.
Rahul, you spoke about autos, and I don't know whether you'll comment specifically on Tata Motors or what they're trying to do right now, but they've had their fair share of disappointments, and the stock has been brutalized by shareholders. But do you think for somebody who actually held on, it could prove worthy now?
So this has always been a tough stock to track, and one of the reasons we don't cover it is because it requires you to take a very big call on Forex and on Chinese demand, both with sitting in lower parallel Bombay is very tough to take. So I think, that's one of the reasons, and the kind of impairments that they have taken, it's not so much the fundamentals of the business. I think it's far easier to call on Ashok Leyland. I'm just comparing like to like on the CV side of the business than it is to look at the JLR part of the story. You've seen what's happened with Apple and China. So it's a very tough call to take. The Chinese, the economy is slowing down. They've probably slowed down to below our numbers that came out yesterday, and that's bound to have a bearing. But I think if this number stays where it is or it protracts further on the way down, it's going to be a lot risky. I think I would probably put Tata Motors, this probably make me a little unpopular for saying it, but I'd probably put it in the basket of PSU banks, where I think it's at best a trade rather than an investment.
I mean, it's been doing what PSU banks have been doing in terms of the price performance.
Absolutely. So I think you'll probably get those days where you'll get a 10-15% intraday move on the stock, where you'll probably be, and the chartists or the technical or the FNO traders who can see these data points points may be able to call this a lot better than a fundamental analyst would be. But I don't see this being a fundamental long-term investment because the data flow could change very dramatically. Just to give you a case in point, I mean, nobody's talking about the rupee going back to 75, 76 right now. If that happens, there's going to be a collat. I mean, it's not just going to be the rupee moving in isolation. There's going to be a euro impact. There's going to be a pound impact. So to start taking those calls is very tough. So I think if you want to stake in autos, I mean, the three names that I took a little earlier, I think Maruti for the passenger vehicles, Leyland for the commercial vehicles, and if you're looking to play two-wheelers, I think Eicher. All of these could be potential portfolio holdings where I'd probably sleep a lot better. I'm not saying I sleep very comfortably in the current environment, but I'd probably sleep a lot better than if I was holding Tata Motors or the DVR for that matter.
Yeah. All right. So I'll just take the point of the currency bit that Rahul was talking about, and I'll talk a little bit more about the currency market, which is bracing for the upcoming elections. The 1 month and the 3 month INR dollar volatility spread has seen a sharp spike. Sharad Dubey, he's here with us to tell us more about this in our chart of the day segment. Sharad.
Hi Devina, the gap between the 1 and the 3 month rupee dollar volatility spread has spiked to its highest in about 17 years, and uncertainty about the general election. While 1 month volatility spread has largely remained stable, the 3 month volatility has started rising from February 12 and has increased from February 14, the day the terror attack took place in Pulwama. The gap has since remained at more than 10%. The general election results will be out in about 3 months from now, and the spike in the 3 month volatility spread has been fueled by the uncertainty in the election results, and the markets have priced this in. According to Anant Narayan, international banking and financial expert and professor at SP Jain Institute, the 1 month volatility hasn't factored in the elections, and he expects the divergence to narrow down from April 15. So this is a chart of the day.
All right, Shara, thanks a lot for that. So a whole host of events that have happened that have probably prompted not just equity market volatility, but even the currency volatility in the recent past. HPCL is your top gainer on the index, and we've been talking about how the outperformance of Z, has pulled it right back to levels of about 482 now. The stock is up 3.5%. This is a significant move from the counter, 50% already in a matter of 1 month from the lows that it made, some time ago. That's about 482 right now. Heavy volumes on the counter. Within the company and what's been happening, probably the anticipation of a deal coming through at a faster clip. But Rahul, what's your sense as to for an investor who's just looking at Z from an investment point of view, business standpoint?
So as you rightly pointed out, it's more a special situation stock now because there is a deal on the anvil. That notwithstanding, I think the news flow has been all right from a business standpoint because I think Gully Boy is a Z promoted movie, and it'll probably be on television sooner rather than later as well. So I think this quarter will probably be good for Z from a business standpoint, not the deal notwithstanding. It's not a stock that we actively cover, but since we're talking movies, I think where the tailwinds have been very strong, seen in the last quarter as well as in this quarter, has been the multiplexes. I think if you see the results of Inox and PVR, they have been quite stellar. Inox more than PVR because of the differential they had with PVR on the advertising side. The rate of growth is actually much faster. So while I do remember, though we don't track it, if my memory serves me right, Z has grown its advertising and subscription revenues by about 20% plus last quarter. The valuations, of course, have come off quite substantially. But I think given that it's a special situation stock right now and the fact that business is okay, even though I don't track the stock, I'd probably just go out on a limb and say it's probably not a bad investment idea to look at right now. But if you must play anything in media from the ones that we do cover, I think I'd definitely look at Inox and PVR as being two names where I think they could be. It could be a very strong year in terms of content because that's the only cyclical.
Q4 is an extremely strong pipeline.
Absolutely, absolutely. I mean, you've had a good start, and I think you have another Akshay Kumar movie in Kesari that's lined up. So I think it should hold up pretty well for the quarter. So I think the valuations, there are not too many stocks that are trading at sub 15. Inox is coming to you at sub 15 1 year forward. I mean, for some people, it's a steal. Absolutely.
All right. Just quickly get in comments from our technical experts as well. Since we're on the topic of Z, Gaurav Bissa at 482, would Z, call for a trade?
It has given a breakout on hourly charts as well, but it's moved up quite a bit. If you look at last few days trading data, then it has seen a stupendous move. So for me, it's a buy on dip candidate at 480. The risk was not suitable, and I would not be too comfortable placing the trade at this point in time.
Okay. But, you know, the other one is this, and Kshitij, I just want to come to you on this one. Dish TV at 40 half, has it moved up too much too soon, or do you reckon there could be more upsides?
See, Dish TV currently trading around 40 rupee or level. We have seen some hefty lower level buying from into the stock, say from 20 level to 40, 41 rupee at current level it is trading. In today's session, it has given a fresh breakout above its 100 days exponential moving average on daily charts. So I believe this was a key resistance level on above which it is already trading. That was 40 rupee level. So I believe this momentum will keep going into the stock, and on a tactical or on a swing, as a swing trade, we can maintain a stop loss below 37 rupee level for the upside potential of 46 to 47 level in 1 to 2 trading session in Dish TV.
Okay, Rahul, before we let you go, what's the favorite bet right now? Not necessarily a small cap stock or a specific stock idea, a cluster of names maybe, or a sector.
If I could just get a little philosophical, Neeraj here. From the time I've known you, I started my career from the time we knew each other as an FMCG analyst. It's a sector I understand, it's a sector that I've grown with, and it's a sector that is extremely secular. You'll probably find a little bit of ups and downs, but I think it's probably the easiest and the most predictable sector to call. Despite all the headwinds or the tailwinds you want, we look at the last few quarters, you may be surprised to know that HUL, I think for about 8 or 9 quarters running, has given you a 20% year-on-year growth in operating profit. It's probably one of the few companies in India that's done that. People are so obsessed with the top line and the bottom line. Sometimes you just miss at the core operating profit of that franchise. With the dividend payout, 150% kind of pre-tax ROICs, return on equity, return on capital employed is in excess of 100%. If I'm going to get, say, an 8 to 10% volume growth in a particular sector, inflation is on my side. I do know that I have pricing power whenever I want to take it. It is not necessarily in collusion, but tomorrow morning if Colgate decides to hike the price of its tubes by 2 rupees, I don't think there's going to be a massive dent. You do have to brush your teeth. There is not much substitute, so on and so forth for soaps. In fact, in soaps, I'm now starting to, when we talk to soap manufacturers, we're actually, you know, even in tier 2 and tier 3 cities, manufacturers tell us that people are moving away from solids to liquids. So that is up trading. People are moving in India towards liquid soaps, even in showers, shower gels, moisturizers and the likes. So I think if you're talking about inflation in your control, pricing power, 8 to 10% volume growth and premiumization, I'm looking at these companies consistently delivering in the near future, if inflation stays where it is, about a 20% kind of operating profit growth. With margin expansion, not too much leverage, so there's no point talking about EV EBITDA, so you should get about a 23-24% EPS growth in these companies. Now the question is, if the monies keep coming in through SIPs or directly, and people are going to keep chasing these stocks, these multiples, when I started looking at them, you used to get about 22, 23 times for a domestic company and about 30 times for an MNC. Today, domestics are going at about 40 times, MNCs are going in north of 50. And I've kept hearing through this process of re-rating that, you know, bahut ho gaya, bahut ho gaya, but they keep getting re-rated. So the point is that there are very few companies in India where you can secularly call a 20% earnings growth. That's not to say that everything will give you a 20% earnings growth. A Lever, Nestle, Britannia, Jubilant Foodworks, you know, PVR, V-Guard may do so. Imami may not. So, but where you see it is where you should put your money. It's the easiest sector for a retail investor or anybody else. You can just see the company. You can go to a Kirana store, you can see the shelf space and take a call. There was probably one hitch that happened with Patanjali, but I think the way that the companies responded to that was quite phenomenal. And I don't think people, when we do meetings with institutional investors in these companies, I remember when we used to do meetings with Lever, Colgate, one of the first questions used to be, okay, so tell us the Patanjali impact. That question is receded. It doesn't even come in the top 10 anymore. You know, so to that extent, these companies, the point I'm trying to make is they innovate, they re-energize, they re-strategize. We just met Varun Berry not even a couple of days back, and he said that, you know, he's going to be launching the mother of all campaigns before IPL, and he said this is probably going to be one of our best years in a long, long time on that base. So, I mean, you know, it's been a favorite sector. It's a secular sector. It's so easy to call. You can call me lazy if you want, but it's just so easy to call that, you know, there's some of these stocks that I mentioned here, just as a Sebi disclosure, I hold personally. I've held them for a very, very long time, and I probably don't see myself selling it for a very, very long time. You know, I mean, Colgate is one that probably hasn't made me the kind of money that I would have expected, but it's, you know, a market leader at 55%. So, to your earlier point, would I buy a Colgate in distress or a Tata Motors right now? I mean, it's a no-brainer for me. I'd probably sleep a lot better. Tata Motors may outperform Colgate over the next 3, 4, 5 months, whatever, but I think it's just a very easy sector to call. Very sleepy sector, if you will.
Okay. Well, on that note, sorry, you wanted to make a point?
I actually just wanted to get him in on Bata as well, if you do track Bata.
Of course we do.
Yeah,
we were probably, I think, the first institutional broking house in India to cover that stock.
So it's at a 52-week high and a life high, I think, for
21% margins. Blew the life. I just met the management. We were in Delhi last week. They hope to maintain those margins. If they hope to maintain those margins, Bata has never traded at 40 times 1 year forward, ever. We have valued the company at 40 times. So it's, we've taken a premium to the 1, 3 and 5 year mean, if you will. So there is a premium on the standard deviation there. But look, I think it's gone through its share of problems. The inventory, supply chain, the look, the feel factor to the people. But I think they're sort of coming out of that. I mean, so since you brought it up and since I just met the management, the Kriti Sanon line of shoes, the red label, apparently has done remarkably well for them last quarter. Power as a brand, our Indian cricket captain, Smriti Mandhana, the women's, endorses it. 20% growth in that. So I think people are now buying
all
the
the segments, the kids segment, the women's range.
Absolutely. So I think they've got something right. Yeah. It's very interesting you bring that up because you see what Prateek Pota did with Jubilant Foodworks after he came in. You had Varun Berry that came into Britannia, and now you've had a new CEO a year back in Bata with Sandeep Kataria. So could Bata be on the journey to doing something similar to what Jubilant or Britannia did under their new CEOs? I don't know, but it's for the first time that I see people on the buy side ready to accept an argument of valuing Bata at over 40 times. So even though it's at a 52-week high, sometimes, a technical analyst will tell you buy a stock in strength. So I think it's coming out, the stocks are up about 80-85% in the last 1 year. So there may be a bit of a time-wise correction, but if it delivers those EPS growths of 20-25%, there's no concern on royalty as such. They just probably need to do a little bit more on the dividend side because they're an FCF generating company. But you never know. It's a good stock. I think if I'm not mistaken, we released this on 26 September 2011. It was probably one of our first reports that we came out with. We titled the report a shooting star. So it's been a long journey since. But hey, if you hold it, I think it's probably the time to continue holding it. I think it's just coming out of a rut, so to speak.
On that note, thanks so much, Rahul, for joining in today and giving us that perspective. Pleasure having you. Take a break on that note. On the other side of the break, we get you the Fab 4 stocks of the day. 3:15, we get you what dealing rooms are recommending, and then some closing strategies. Stay tuned to Bloomberg Wind Live.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Sports science is the science of performance. We look at all the variables that could give an athlete a competitive advantage in a high-performing environment.
He's been a sportsman, a successful coach, a sports scientist, a motivational speaker, a monk, and an entrepreneur.
How we navigate our body with physical, nutritional, emotional, spiritual health. That is what I teach people. Where to find balance, how to find balance, and the quest of finding balance more than anything else.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Shenoy, we're back with countdown. Last few minutes of trade at 28 odd minutes left to go for market closing. The Nifty has pulled up smartly. Now this is the highest point of the day, I believe, for the indices. So 10,870. A smart move towards the 10,900 mark. Goes to see whether we close above it or no, because the start to the series is going to be a good one. Banks are doing really well, about 1% higher on the Nifty Bank. Let's quickly go across to see how Europe as the pocket has been trading, and the Dow futures also, that will come up on your screen. So positive cues coming in there across the board. Europe DAX trading high by 1.2%. Another 0.6% gain for the FTSE 100. The Dow futures also trading in the green by a good 0.5% plus, so 153 odd higher for the Dow futures. Taking a look at the turnover right now, you would probably see a slightly weaker number, a smaller number, because it's the first day of the new series. You wouldn't really see the F&O activity pick up to that great an extent. So 3,44,000 odd crores is what you got on the NSE F&O turnover. Cash market turnover, 26,000. So that is also slightly subpar in terms of the average. But let's bring in Yash Upadhyay. He's here to take us through the list of Fab 4 stocks that he's picked out for us this afternoon. Yash, good afternoon.
Good afternoon, Devina. I'll start with Welspun Enterprises, and that one's buzzing in trade today, up close to 11% at this time. 9.5%, after Antique came out with a report on the company, initiating coverage on it, and they have set a target price of about 172 rupees, which indicates a potential upside of more than 70% even from the current levels. So watch out for that. Most of the sugar stocks are buzzing in trade. Triveni Engineering being no different, up 6% after the government announced soft loans to the tune of 10,540 crores for sugar mills in order to pay off the huge cane arrears that is outstanding. PSU banks as well are in focus. So Oriental Bank of Commerce, that one's up about 10%. Don't really know what's going on, but a lot of PSU banks are buzzing in trade today, with volumes too coming in significantly higher. So watch out for them as well as Strides Sassoon, which is up 3% in today's day of trade. Some fresh longs are seen there with high open interest build up of more than 9%.
Okay, we'll watch out for all of these. Thanks a lot for that, Yash. As we speak, watch out for the Nifty too. 80 points higher in trade now. Some really strong, on a really strong footing is the Nifty 50 right now. Banks up about 1%. So this is going out as the really strong first day of the new series. Gaurav, Bissa, let's revisit the indices right now. For somebody who doesn't have any existing positions right now at the Nifty or the Nifty Bank, what should he or she do?
You know, it's nothing common, I would say, uncommon right now. We have been opening at levels of 10,900. We have been starting the series with this particular level as well. For me, it's having a strong resistance at levels of 10,950, 11,000. Fresh entry is to be done either on a breakout of above levels of 11,000 or an dip towards the level of 10,727.40. At these levels, fresh entry in the index would not be the best fit right now. Whether you talk about Nifty or Bank Nifty, both are stuck in the range, and this particular grind that we have been seeing for the last 4-5 months, it might continue for next few more trading sessions. I would not recommend buying Nifty or selling Nifty at this point in time.
Don't go out and trade the index at this point of time. I think that seems to be the word coming in from Gaurav Bissa. Deepak Shenoy, founder and CEO at Capitalmind, joins us right now on the show. Never too soon to have him, always good having him. Deepak, thanks so much for taking the time out and being with us. Incidentally, Deepak, Jamna Auto is up 9%. We'll talk about that too. But just one word on the market behavior. Do you think the market believes that the stress at the border is de-escalated, as a result of which such a strong move on a day when the other global markets not necessarily have done as well?
I know, Neeraj, I think it's like a back-end effect, because the markets in the West and most of the rest of the world were up in the last few days. We weren't, so it's probably just playing catch-up. But yeah, I mean, I think de-escalation at the borders also helped. It does, it feels better that there's not going to be a full-fledged war. At least as of now, there's no indication that such a thing would happen. So the markets will obviously, I think, react positively. Having said that, it's also that there's an impact of upcoming elections, increased level of spending towards that. That will obviously come towards the end of April or towards the early parts of April, which probably may drive some of the smaller and mid caps to change as well. And some small regulatory changes, I think, they've also driven this. And, FIIs have also been investing money through this border crisis as well. So, add all that factor up, I think you get something. We don't know the reason right now, but I still think we're just only playing catch up to the Western markets.
Okay. There is a fair bit of interest, Deepak, Shenoy, selectively within some of those beaten down pockets. Now, I sound like a stuck record because almost every show I ask the guest about what's happening to autos. Autos and auto anchs in particular have really gone through the roof. I mean, I use Jamna Auto as a corollary, but Motherson Sumi the last few days has done exceptionally well from those lower levels. A clutch of other names have bounced back very, very strongly. Is the market happy with the price damage, with the valuation damage, or is the market believing that almost all the bad news is in the price?
So I think, numbers have started to show up today, and we're seeing, a marked change from what the numbers were in January. It's a little too early. I expected that Feb numbers would still be okay, but March was when the recovery would start, mostly in both CV and in personal vehicles and two-wheelers. So I'm a little positively surprised by the numbers here, but also there's much of the demand has been kept or has been artificially low in the last few months because of the increase in cost due to insurance being bunched up 5 years and 3 years. And I've talked about that earlier, I think, when I said the effect would last 6 months. 6 months from August, September is probably Feb, March. So we're seeing moving out of that impact right now. And also, I feel auto will start doing well towards the middle of this year as well, because BS6, which will come in next year, will increase costs. So there will be some anticipatory buying, which I feel will drive in more purchases this year than perhaps next year. So I think that is probably driving things. And like you said, valuations have been beaten down substantially. Jamna has fallen 50% from the top, and it's only recovered, up only about 9% now, which is, for a person who bought at the top, it's not so much of a, in terms of happiness, it's not quite as much as if you bought it at the bottom. So there is a substantial valuation gap from what we saw last year to now. So part of that is getting recovered as well.
The other one which has done really well today is Arvind. That's up about 10% in the session, and almost everything, not everything, but a lot of financial names have done well. IDFC is up about 10%, and a lot of PSU, mid-sized PSU banks, the Vijaya banks, Dena banks, syndicate banks of the world have done exceptionally well for themselves. So do watch out for those set of names as well. In a few minutes, of course, we'll get a sense of what dealing rooms are recommending in the session today. But just want to pull up what some of the broader end of the spectrum stocks have done in the last few minutes, and stocks which have gained. So Gujarat Alkalis up 11.5 and about 3 or 4% in the last 10 minutes. So a bit of a spike coming in the last few minutes of trade. Similarly for Birla Corp, that one is up about 9%, but some bit of upticks in the last few minutes. And Whirlpool up about 5%, some uptick in the last few minutes of trade. So all of these stocks trending and trading near about their day's highs for themselves. Deepak, cooling solution companies, Whirlpool, Voltas, the entire air conditioner pack, having a really good time the last few days.
Well, I guess summer's here again, but yeah, the market always tends to price them higher around these times. I think a couple of things here. There's some de-escalation in costs. There's also, I think, some feeling that the summer is going to be intense. So we're going to see that. We've seen this happen at some point. Even ice cream companies start doing well. Of course, quality is off the charts because of what happened, but we'll see the other players also start to move. But I personally don't have any other indication here, rather than the fact that literally everything's going up today. We're seeing 7-8% moves in a lot of mid and small caps. So don't know how to differentiate between that versus a specific sector personally at the moment.
Okay. Let's get a sense of what dealing rooms are recommending in the session today. Darshan Mehta and Yatin Motar here with their channel checks. Good afternoon, both of you. Yatin, let's start with you first.
Neeraj, PSU banks and mid-cap banks are in focus for trade today. All of them are active. And Karnataka Bank also is one stock which is quite active in trade, 3% up for that one. Dealers, on the basis of F&O trends are recommending a buy today, sell tomorrow kind of a strategy as far as Karnataka Bank is concerned. And two auto stocks in focus, Bajaj Auto as well as Tata Motors. Bajaj Auto, of course, they have reported slightly weaker set of monthly sales numbers, and the stock has not corrected like the other auto stocks, and dealers are indicating that a lot of FI desks are indicating that there is selling as far as Bajaj Auto is concerned. And also watch out for Tata Motors. We had an exclusive conversation with PR Sanjay regarding how really does the Tata Group want to do a stake sale in JLR. After that, the stock is quite active, but dealers do indicate that domestic funds are also buyers in trade today. But Darshan has a few more stocks to talk about.
Yeah, so among the non-F&O stock, there is NOSIL, which is up almost 5% in trade on decent volumes. Over 2 million shares have already been traded. Dealers indicate that for the past one trading session, HNIs are actively accumulating. CG Power is up almost 10%, 10 to 12%. It's up almost 14% now. The buzz in the street is that there could be a potential deal with a private equity player, and that's something that is taking the counter much higher. And finally, the last stock is Nagarjuna Construction Company, another 5% upside. Dealers indicate that some of the domestic funds have been taking active positions in the counter.
Wow, watch out for all of these. Thanks a lot for that, Darshan. Well, Nagarjuna Construction, and I remember a conversation with the management when they came out post the numbers, extremely confident about both the order flows as well as the kind of growth that the stock will show. So select construction companies have done really, really well for themselves. Kshitij, coming on NCC as a trade 4.5% higher. Would you believe that there is some more upside here?
Yeah, definitely. Looking at the charts of NCC on a daily time frame, the stock has been consolidating in a broader range of say 80 rupee level to 87, 88 rupee level, and this consolidation breakout has been happening into the prices in today's session. And also on a technical charts, the crucial resistance level which was placed around 90 rupee at its 200 days exponential moving average has also been tested. So I believe this breakout into the prices after a prolonged consolidation can take up prices towards 94, 95 levels. So on a short term basis, one can need to keep a stop loss just below 85 levels for the upside potential of 94 to 95 levels in 1 to 2 trading session in NCC.
Yeah, that stock's doing really well for itself though in the session, not just today but the last few days. Z Entertainment 486 and 487. It's arguably the best performing stock in the last few days. In today's session for sure, 4.5, 486 or 487 and counting. Deepak, let's work with the hypothesis that the promoters are able to enter into a deal sooner rather than later. A fortnight, a month and a half, whenever it happens, at valuations which might be in or around these or maybe slightly higher. My question is, post that, and assuming it's a reasonably large player that comes and takes this stake as well, post that, somebody is holding Z, what should that investor's approach be?
So I think if he sells the stock, and he gets a buyer for 20% or 15% or 20% that he wants, this is a good stock to hold. There is no problem in the stock per se. There is not much debt. There is also no liquidity problem inside the stock itself. It was the promoters being over leveraged that was a problem. If they manage to get a buyer, I think the price will go up because the buyer is likely to have to or desire to buy this stake at a higher price than market. So I would assume a 500 plus, 500, 550 plus kind of a price would be where he will strike a deal. If the deal is struck at a much lower rate, then you have to worry because it will signal a little bit of desperation. But I don't think that's evident from anything that I'm seeing so far. So I think it's only positive for the stock. So there's no change in, if there's no change in fundamentals, there's no change in management. Only 20% is going to be held by a strategic partner. Nothing changes. In fact, it's probably only going to be positive unless we get something else, as part of this transaction that will be a surprise. I see only positives for Z from a buyer, for a Z investor. That is.
Deepak, one would have thought that what Bharti Airtel has announced should be net positive, paring down debt, Brokerages believed EPS accretive too. The reaction, though, hasn't been one of optimism.
That's how the markets are, Neeraj. I mean, sometimes we don't recognize this. I'll give you an example. When Apollo Tyres did that Cooper Tyre acquisition, the price fell from 96 rupees to 66 rupees in a matter of days. When it wasn't evident that the price that they had paid, the way they were structuring it, was if the acquisition had worked out, it would have been brilliant for the company. And if it hadn't worked out, it was still going to mean that the company was the same as it was earlier. And when the acquisition didn't work out, the price went back up. So markets panic sometimes unnecessarily. As a disclosure, I have a small position in Airtel as well, but I also feel here that if Airtel were to raise capital, reduce debt, and they have been able to raise prices also recently. It's been very under the radar, but very slowly both Jio and Airtel have raised prices for their customers, including prepaid, and rationalized a lot of resources internally as well. So I feel that, plus perhaps the IPO that they will do for their African business will add into liquidity, reduce consolidated debt, and overall be a good thing for the company. However, everybody looks at the price. They're saying rights issue at 231, so we should beat this stock down. Good, I think, because if you're a buyer in this market and not a seller, it's a good thing that prices fall, and so that you can buy it. And remember, this was a stock that was at 400 rupees in 2007, so it's really not done anything for a decade. And if it were to be one of the 2 or 3 players surviving in the telecom space, they have some pricing power left. I think this is a good gainer from here. So yeah, I welcome the price down. I don't propose to explain it, but I think it's good that you get the same company at a cheaper price today.
Yeah. No, point well taken, Deepak, and nice examples to kind of put forth the point as well. Okay, just before we move any forward with yet another Bloomberg exclusive, it's 3:20, so I need to get in closing strategies from our experts very quickly. Gaurav, Bissa, to you first, your top closing strategy.
As far as the stocks are concerned, my recommendation would be buy on Lupin. It's giving us good breakout. 785 is a crucial level. It's been finding a lot of resistance at those levels. It's sustained those levels so far. One can keep a stop loss of 772. 815 would be my target. Second recommendation would be on L&T Housing Finance. Very strong writing happening in 130 call option. 120 is level from where consistent shorts are seen getting built. It's now and keep a stop loss of 126, target of 132.
Kshitij, what about you? Your top call?
Yeah, definitely. I'll also go along with the pharma stock. Some low-level buying has emerged into the last 15 to 20 minutes in pharma stocks. And thus, currently, I'm looking for the Biocon currently, trading around 633 level. The momentum has picked up into the stock, as stock is also given a breakout above the recent resistance level. So keep a stop loss below 620 levels for the upside potential of 645 to 650. And one more stock from the banking stocks. And the stock with the IndusInd Bank, currently trading around 1515 levels. Keep a stop loss below 1485 for the upside potential of 1550 to 1560 in 1 to 2 trading sessions.
All right. Let's move on then to another Bloomberg exclusive. L&T, Infotech and Bearing are set to be in the race to buy out VJ Siddhartha's stake in Minda Tree. Anthony, he's joining us right now with the details. When this news initially came out, L&T Infotech was the first names that the market started to anticipate would be interested in the stake sale. And now we have Bearing too.
Yes, so this was a very highly competitive bidding process was underway, and next week a final decision will be taken. From what we understand, L&T Infotech and Bearing are leading the race, so both of them are offering between 950 to 1,000 rupees per piece per share. The other people still remain in the race, including KKR and so on. But another interesting thing which we picked up is that L&T Infotech, when it comes to L&T Infotech, Minda Tree founders are not very keen about giving that stake because they will be a direct competition also. But of course, it is going to be Siddhartha's stake which is on the block, and L&T Infotech and Bearing stands the highest chance for winning this stake, this about 20% stake as of now.
Largely on the account of the higher price that they've given.
Obviously, largely.
But no, I'm just saying, I'm just tying in because of the point that you made that the company is not quite interested in giving the stake to L&T Infotech because of the direct competition.
Exactly. The other partners or the other founders are not interested in.
So have your sources been able to tell you if bearing is a higher probability because L&T Infotech is direct competition and both the bids seem to be similar, or no such information?
So what will
available?
swing in favor of?
It will be mostly pricing. It will finally what will cut it is the pricing. And although the other founders have expressed their reservations regarding selling to L&T Infotech, Siddhartha doesn't seem to have any of those concerns.
And next week you're saying it should get...
It should be coming next week.
All right. Thanks a lot for that update, Anto. So that's on Mindtree, and two names there taking the lead, L&T Infotech and Bearing. So that's a private equity firm. So both these names. And like Anto said, the others are not too keen on L&T picking up the stake because of direct competition. But pricing is of prime importance, and the highest bidder wins. Mindtree, though, up about 3% in the session right now. 936 is where the counter is trading at.
Deepak, right down your alley, geographically as well. About Mindtree. With an assumption that the stake sale goes into one of the stronger hands, it doesn't necessarily make Mindtree an ideal name to buy into, right? I mean, a lot of IT companies, due to differentiated models, etc., have started to do really, really well. Which business, which valuation do you like the most? And if indeed Mindtree goes ahead with this, what's the view on Mindtree?
So, IT in general, we're seeing a lot of pickup on deals, and mostly from the US. There's going to be a lot more deals if Brexit goes through, no matter how it does, because geographically, India is actually better placed to continue to serve, and there'll be a lot of changes which IT service companies will grab from just Brexit's implications itself. But more importantly, the US itself has become a huge hunting ground for deals. Your employment there is an all-time high. You literally, you would want to hire outside because you can't hire within the US. So that has been a driving force, I think, for a lot of deals. And the deals that are coming in are of a different structure than they used to earlier versus. So I think that is positive for most of the top IT companies. Differentiated companies like LTTS perhaps, or Tata Elxsi, against the disclosure, we hold both. We like those because I think the engineering outsourcing is a big deal going forward. But broad IT service companies like Mindtree, Emphasis, and the mid-cap layer, NIIT Tech perhaps also, which is an acquisition play, and the top layer of companies. I'm seeing a lot of action in them, and I think you should have an allocation. These prices are a little bit, they've moved up a little bit, but I think results by the end of this year will start to show significant momentum in earnings. So earlier they used to grow at 8, 9, 10%. I believe the movement will take them to the teens and higher to more than 20% in case of mid-cap. So I like this. From a Mindtree perspective itself, if LTI buys it, I'm not so interested. If Bearings buys it, I'm very interested because I think Bearings would be a play for a much larger price move and scale compared to what would happen if it were to LB LTI. So it's a very interesting play. I think it also helps Coffee Day's founder to generate cash and to be out or reduce his influence within the company. And I think it's actually positive for the promoters as well. If Bearings comes in, it'll help them build a business that is even bigger. But I still think it's going to be an acquisition story. If not, right now it will be a small one, but the bigger one will be 5 years down the line, both for Emphasis and for Mindtree.
Deepak, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. Gaurav, Kshitij, just stay on. We'll just come to you and take in your final thoughts as well. Wockhardt, by the way, is another stock that you should keep at the back of your mind. On those flashes that came out just a little while back, that stock is up about 7%. But the market, the real hero, the Nifty Bank, almost 1%, slightly around 0.5% for the Nifty and the Sensex, and the broader markets have actually done even better, with the mid-cap and the small-cap indices really showing some really remarkable gains. The small-cap index in particular, 2.63% and 1.5% for the mid-cap index. So it's a strong day for the markets in the session today. Let's speak about individual companies, and I'll address the large caps. Then I'll bring you the mid-caps. Z Entertainment, 4.5%. HPCL, also doing very strong. Actually, all the oil marketing companies have done really well for themselves. IndusInd Bank about 2.5%, Yes Bank 2.5%, Vedanta 2.5%. That's been the order of the day. The top 10 gainers, each of them have gains over 2% apiece. What's not done well? Bharti Airtel about 3.5%, a stock in news. Bajaj Auto closing in on around the lowest point of the day. There's some losses to Axis Bank today. Cipla, Reliance Industries marginally off, must be amongst the top contributors on the losing side because of the weightage that it has, but clearly the day belongs to the gainers. But the broader end of the spectrum, even more stronger, and the market breadth looking even more robust, Devina.
Well, most definitely, Neeraj. Today has been a strong start to the new series. The broader market picture looking extremely robust. And I'll start off with the gainers, and we'll keep it to the gainers in today's session because that's where the spotlight lies. Religare, second straight day in a row, and the stock has done phenomenally well. Double-digit gains coming in on Religare, 20% upper circuit. And I remember yesterday as well, Religare was on the top of the charts with regards to what was happening in the broader market space. So 14% yesterday, 20% today. So that's a big move on the counter at 26. Sale is the other one, the JP Morgan upgrade that's coming in. Price target of 78. The stock is still below that price target at 52, but is up 9.5% in intraday trade. CG Power is the other one that's doing well. The entire PSU banking lot in today's session is a buzz with a lot of activity. So you put a finger to it and you'll find them with gains of in excess of 5%. Oriental Bank, Union Bank, Dena Bank, Allahabad Bank, all those names have got hefty gains in today's session. The other one to point out is Jet Airways. That stock is doing well. Some more news coming about with regards to Mr. Naresh Goyal ready to step down from the board. Stock moved up about 4% Magma FinCorp is doing well. Walk out on the back of the news that we just saw. The last minute spurt that has come up with the stock is ending with gains of about 7.5%. RCF doing well. Mindtree, now L&T Infotech and Bearing PE, both of them in the fray in the race to get VG Siddhartha's stake in Mindtree. Stocks up about 3% M&M Financial and Repco Home Finance. The MBFC pocket too in today's session is extremely active. So financials, be it the PSUs, be it the banks, the bank nifty itself is up about almost 1%, and then the NBFCs, all of them doing really well in today's session. So that's what you've got in terms of the market close this Friday afternoon. But it'll be interesting to see how the entire week looked, post the volatility that this week actually threw up for us.
Let's get those weekly gainers and losers on the large cap end of the market first. Bharti Infratel 6% lower, Adani Ports about 5% lower, and that stock has not done well despite a couple of days of gains. Eicher Motors 3.5%, nothing kind of a week. Otherwise, it's not been too many big movers, to be honest. A lot of heavies and a lot of stable names like HDFC, HUL looking slightly soft.
Yeah, and at the top you've got all these companies that have had issues in the past. So Z, Yes Bank, things turning around for both of them. Up about 8% apiece. You have UPL up 5%. Ultratech Cement is a pocket this week. Saw the spotlight, and Ultratech there up about 7%. Let's take a look at the mid-cap space now and how the week shaped up there. So much better, much better, and the outperformance is pretty clear in this week's trade. 2.5% on the mid-cap index. Most of it, I think, coming in the last 2 days. But losers still. We were talking about Bata being at 52-week highs, but this week I think it gave up a bit, 2.5% under. Divan Housing Finance down 7.5%. Enables Ventures, Reliance Infrastructure, and Edelweiss succumbing to pressure, second consecutive week.
Yeah, Adani Power, decent gains. Reliance Capital, decent gains. Spark, Dish TV, just shows what the Z Group has done. 9% higher. It's at 40 rupees. it's given you 100% returns.
Yeah.
Since the lows, nearly 100%. From 21 odd rupees to 40 odd rupees, nearly 100% returns.
I wish you would have said that when it was at 23 bucks.
I wish we also could have soothsayers.
But yeah, Nalco there too. The dividend of 4.5 rupees, 9% dividend yield for that counter. 10% on the upper side, and the PSU banks, all of them, post the fund infusion, you saw all of them moving up, and today I think a follow through to that happened too, and you saw all the financials buzzing about in trade.
Yeah, and similarly for the small cap space, I'm sure you'll see some strong gains for a clutch of names. Persistent Systems 11%, Century Ply about 11%, Kalpataru Power, KEC, both of them. KEI Industries too, by the way, has had decent gains. And Himadri Specialty Chemicals, CG Power by virtue of big move today as well, up about 16% in trade.
All right, so that's what it looks like in terms of the market move this entire week. Let's get in some closing comments from our technical experts. Gaurav, Bissa, Monday is going to be a holiday, so it's a truncated week. But as we step into trade on Tuesday, what would the approach be?
For me, it would be buy on dips market. On daily charts, Nifty is trading in upward sloping channel. The supports would be around 10,800. The breakout levels it has been testing. So anyway towards 10,820, 815 can be bought. 30-40 point stop loss on the upside. 10,920, 940 would be the levels workout for buyers. Would be positive, but I would like to add Nifty on dips.
Shatish, what's your view?
Definitely the kind of buying momentum we have seen in today's session, or I'll say from last 5 to 6 trading sessions, especially in stocks. And in today's session, the PSU banks have been performing marvelously. If I'll talk about Bank Baroda, or if I'll talk about some other PSU bank. So I believe rather than Nifty, Bank Nifty looking much more stronger to me. So coming week, like this is a long weekend. In coming week, don't be get into greed. Don't get into that much rush. Better to buy on the dips. If I talk about Bank Nifty's future prices has currently closed around 27,190 levels. If sometime you get rate around 27,100 level, that will be a good opportunity to go long in Bank Nifty. Keep a stop loss below 26,950 levels for upside potential of 27,300 to 27,350 in coming week.
Well, Jaman, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Have a good extended weekend. And with that, it's a wrap on this edition of Countdown from Devina and me and the team that put this show together. Thank you so much for watching. We await the release of Abhinandan Vartman. And of course, once we come back from the break, the market wrap coming up as well. So stay tuned.